It's no secret that South Africa's economy is struggling. We have an extremely high unemployment rate and our GDP is still sitting at levels last seen in the third quarter of 2017. In 2018, President Cyril Ramaphosa announced his ambitious plan to raise over 1.2 trillion rand of investments over a 5-year period. This in a bid to reach this target. The 4th South Africa Investment Conference kicks off this week, and let's get some details now on what we can expect, and we'll speak to the President's Special Economic Advisor, Trudi Makhaya. Trudi, good morning to you, and thank you very much for making time for this important conversation. We've had 3 investment conferences thus far. What have we achieved from those?
So from the past investment conferences, we've seen business and investors come forward to make commitments of over 770 billion rand in investment projects. That's the figure over 3 years. Some of these were multi-year commitments. Now, when we look back at that figure, we see that about 60 billion has been complete, in the sense that the factory is up and running, or the money has been spent in whatever the production capacity is. We also see that 460 billion, the bulk of that amount, is under construction of some level. So it started and it's proceeding. And a smaller amount, less than 10%, has either slowed down or has been halted. So overall, we're happy with the numbers, that the overwhelming majority is either complete or in construction. Over the years, we've seen the President visit some of the production facilities, be it Mercedes-Benz in the Eastern Cape, various investments in the Dube Trade Port, Ford Motor in Tshwane, in the Northern Cape, Vedanta. So all over the country, we've actually seen in concrete terms those projects being delivered, be in terms of mines, data centers. It really varies across industries. We'd obviously like to see more, but we think we're on track for the 5-year target to reach what the President had said.
All right. So quick recap. So 700 billion in commitments since the last 3 investment conferences, 60 billion complete. In other words, you're saying that factories are up and running, 460 billion under construction. What worries you and the President about these investments perhaps stalling or completely not materializing? What are some of the factors?
So if we look at the about 10% that are slow or stalling, there are various factors. There are a few where it's purely market conditions, say a consumer product that just doesn't make it in the market. And there's very little that government can do in that regard. There are a few others where the slow progress had been around regulatory permits, be it environmental licensing, water licensing. Once again, the processes have to be objective and they have to run their course. But where we see that there are real significant delays, the President has been talking for a long time about reducing the authorizations for water licenses to less than 90 days, for instance, and that is happening. Yeah. But, we've had to have those kinds of conversations to ensure that investors get answers, even if it's a no, but that the answer to those authorizations comes in quickly. We've had a few incidents where community unrest has been an issue. So that is also something that is being looked at from a security cluster point of view, to ensure that, A, there is proper social facilitation as a first instance, peaceful mediation. But if there are incidents that threaten life or that threaten property, that there is an appropriate response from the security system. I mean, of course, with the July unrest last year, that has also come to the fore as a concern for many investors. Yeah. And the security cluster has been working on a proper response to that challenge.
I'm glad you mentioned the July unrest. That's a domestic issue that should not be overlooked, Ms. Makhaya. Let's talk about Operation Dudula, for example, that got a mention from the President in his address on Human Rights Day yesterday. Issues like that, how worried is he that they could deter investment?
Look, I mean, I think the best one could do is to mount an effective response. So I think you'd have heard in his remarks yesterday that he was by no means saying that communities should be passive. Engagement, community activism is important. Communities rooting out problematic practices within their own neighborhoods is important, but it has to be done within the confines of the rule of law. It also has to be done in non-violent ways, actually bringing in security services to support that. So it is something that he has been looking at. There's been various meetings of the Security Council where strategies have been shared around how to also have programmatic responses, because there are also issues that recur, like infrastructure theft, like community protest that becomes violent, and those can have a pragmatic and systematic approach across the country. But if we look at movements like that are arising, I think there's just got to be that balance between activism that doesn't spill into creating an insecure and uncertain environment.
Let's talk about the Russia-Ukraine conflict. Is that something that stands in the way of investment flowing into the country? The knock-on effects of this ongoing war? And of course, there are many predictions about how long it may take. Just how worried should we be as a country that issue, it continues for longer than it should?
Yeah, I mean, it's got so many levels to it. I mean, on the one hand, there are obviously some commodity markets where we're producers, where we'll benefit. But overall, if you look at, oil prices, that is a very important risk, a negative risk for our economy. And so one would hope that the conflict doesn't escalate or continue for too long, because we're seeing real instability in oil markets, over and above, of course, the human costs of this. Now, if we look at investment trends, we do worry, of course, that in terms of external investments, we might see challenges. But we also often, want to emphasize that the investment drive is about both domestic and international investment. And there are instances where I think the call for localization and the call for having security of supply of key inputs and even key products in an economy is very important. So once again, we would urge our domestic business to also see this as an opportunity to increase the resilience and the self-sufficiency of the economy. We've seen businesses throughout the pandemic suffer from supply chain difficulties. We've seen the issues around vaccine nationalism and the importance of having domestic capacity. So I think we need to pay attention to that angle to say on certain critical materials, certain critical inputs, we should be investing for domestic capacity and by domestic investors. Of course, international investors are also welcome in that regard because they also want to diversify their sources of supply, across the world.
There are commentators, Trudi Makhaya, who are worried, and I'm afraid I'm using this word worry consistently in this conversation, but there are commentators who are truly worried about the Russia-Ukraine conflict and the economic impact of it. As a result, we're starting to experience oil prices that will have a trickle-down effect in terms of food prices going up. The worry here is that these may induce another July unrest if there isn't a way that government can deal with fuel price increases. What are you advising?
So on the fuel price, it's been an ongoing conversation for some time in terms of reviewing some of the formulation of the price and the components of that. So once again, that has been revived as a process. There were findings earlier, but I think they could be enriched in terms of how we look at the pricing formula and trying to see if there's any scope to support consumers in that. I think more broadly, there's also work that is underway to think about, in a holistic way, our social protection system and ensuring that no one is left out and is excluded, lives below the poverty line, for instance. In the budget, the finance minister made it clear that it's still early days, but there is concerted effort to look at social protection, particularly as it relates to unemployed adults, and that's work that's been important. I think also work that we have done around public employment is going to be crucial to ensure that for those who are not captured by any growth in the economy or who are not captured by other interventions, there's got to be opportunities that are created directly by the state to ensure that they have livelihoods. Ultimately, the structural reform agenda is also very important because, as the president has emphasized, we have to get private sector investment and growth going because that's where the greatest proportion of jobs are going to come from, particularly from small business, because that's one area when we look at other countries, when we compare metrics, our small business sector is too small. Our informal sector is also too small because of red tape, because of many constraints. And so we've got to also unleash the ability of the township economy, the rural economy, to also be self-sustaining.
Final question, Trudi. And it's a question that I'm afraid you are going to have to try and open up your chest and talk to us frankly as South Africans. The capacity of the state has become a genuine concern. There are those who say we are starting to experience symptoms of a failing state. There are those who are more emphatic to say we are a failed state. How do we attract investment in an environment like that, where there are people who are raising these concerns who are not in a position like mine? They're not mere mortals. These are business people who are talking this language even overseas.
So there's always been people who've talked that language, from 1994. There are two ways to look at it. I think there's a destructive element that doesn't really build and that writes off the country. But there's also a constructive element to say we've seen this country go through ups and downs. We have had capacity challenges over the past decade or so. We've seen state-owned enterprises not playing the role they should be playing. We see local service delivery at municipal level collapsing in certain areas. So no one is denying that. But we've also seen that the president has put in various measures to revitalize districts through the district development model, to bring back power to communities, to ensure that there is proper service delivery and also accountability and transparency. We've also seen reforms to professionalize the public service, to make appointments transparent, rigorous. So, no one is denying that there's a problem, but I think when you see concerted effort to fix that problem, it's very difficult to talk about a failed state. And, there's work that's being done. And when we talk to a lot of business people, they acknowledge that there are still a lot of opportunities and endowments that can be capitalized in this country. And through our partnership as labor, government, private sector, civil society, we will turn this around. So I try to stay constructive because, that's all that one can do to really try and make a difference rather than writing off generations when we are so well endowed as a country.
Trudi Makhaya, thank you very much for your time and indeed opening up about this last issue of whether or not South Africa is experiencing symptoms of a failing state. Very honest views there from her. Let's stay constructive, she says.